Chip stocks are flying, but is it fundamentals or just FOMO? This is Sectors Up Close, and we're talking about semiconductors. Chipmaker stocks are on a tear, riding the AI wave as investors pile in. The sector is basking in a flood of good news, from towering valuations to blockbuster deals. Meanwhile, the Philadelphia Semiconductor Index is surging, and for now, the rally looks unstoppable. But with earnings season approaching and valuations stretched, the risk of a sharp correction is rising. So will the semiconductor supercycle persist, or are we headed for a silicon-sized snapback? Let's ask Tyler Ellegard, president of Gradient Advisors. So Tyler, AI services haven't gone mainstream. Is this rally grounded in real earnings potential, or are we in full-blown hype mode?
Yeah, I think it's going to be interesting to see where the services side of things go. Right now, it is really just business to business. And the question that I always bring up for the AI trade is, where do we start to see this more and more inside of our normal day-to-day lives, outside of the robotics and the automated cars, which is going to be fantastic. But generally speaking, I don't see the vision for it at this point for these AI companies and the products and services they're going to bring to us to help us in our normal day-to-day lives.
Well, billions are pouring into data center construction, but will actual AI demand catch up with all this capacity, or are chipmakers spending prematurely?
No, I think the demand is there. The question becomes, when you start to look at companies and investing in them, what is the return on investment? And I always look back to Meta when they started investing in the metaverse, right? They had years of runway to do their investment and build out the metaverse. But then it came to what was the actual return the company was earning on it. And it was very little. The company was still burning significant amounts of cash. And so I think we're in that similar phase right now of investors are okay with these companies spending because the demand is there. But again, going back to the products and the services, where is that return on investment? I think we have a couple more years of rope for these companies to continue spending what they're spending.
Well, chip stocks have become the default AI play, but with everyone piling in, where do you see the real upside? What names are standing out to you?
Yeah, we certainly heard some big news this morning with AMD and OpenAI. OpenAI taking a 10% stake in AMD and vice versa, buying chips from AMD to create a 6 gigawatt factory. So it'll be interesting. But I think outside of those names that we heard about this morning, I think you've got your Broadcoms. They're in the ASICs division, XPUs, which are slightly different than GPUs. We really like TSM because they are the largest manufacturer of semiconductors and the most advanced. And then on the product side, ASML, the lithography machines, super precise, super expensive, and TSM constantly buys them. So I think those are the three names that we're favoring in the space right now.
Well, we do have to talk about Nvidia as well. It's dominating AI chips, but it's deeply exposed to China, and geopolitics are heating up. Can it stay ahead of rivals under these constraints?
I think so, but it certainly is a headwind for them to grow their sales because China would be a big buyer. They still have the H20 chips that can be sold to China. But again, you've seen the Chinese government come out and ask that companies no longer buy Nvidia chips. I know that there have been some companies coming out from China saying that they do prefer Nvidia chips. But again, there is that just geopolitical risk that sales from the Chinese side for Nvidia could go away. We'll see how that plays out. I'm sure part of it is just the negotiations that are happening and positioning the political parties. So I think, generally speaking, Nvidia can still stay ahead, but again, it's going to be a headwind for the company.
Meanwhile, investors are also rotating into the tool side, like applied materials, but new US export rules are biting. Are the barriers to entry getting too steep in the sector?
Yes and no. I think from the tool side, yes. From the broader semiconductor side, I don't think so. I think there could be a new entrant if they have this fantastic idea, and there's plenty of private equity that's wanting to be in this space. So I wouldn't say it's too high, but it is a challenging thing to break into at this point with how significant the supply chains have gotten and how intricate they've become.
So finally, Tyler, at some point, markets will want returns, not just promises. Will we see real profits from all this AI spending this upcoming earnings season?
Yes, but again, I think it's going to be more around the chip manufacturers because we're building data centers, and those are the companies that are selling an actual product right now to the purchaser, whether it's Microsoft, Meta, any of the hyperscalers. And those hyperscalers are going to continue to do this. So I think you will see the revenues continue to grow significantly for the chip manufacturers. On the services side, I think it is still a little bit uncertain of when exactly we're going to start to see that revenue and earnings pick up.
That was Tyler Ellegard from Gradient Advisors. Don't forget, you can watch more videos on Reuters.com.